Hello and welcome. You tune into Buy Now Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. And this is the show where we get all your stock specific questions answered. Keep sending in your stock specific questions. But before we start with the show, let's take stock of how the market is shaping up at this juncture. Kanishka, we are pretty steady on the market, if you will, as far as at least the frontline indices are concerned. We are holding above the 24,650 levels on the Nifty. Nifty Bank also comfortably in the green, trading with gains of almost 170 plus points right now. Broader markets though seeing bit of a correction there, but nonetheless, net it is holding on strongly today.
Absolutely, Ankita. It's holding on pretty steady at this point. We have been discussing how we have seen this week a day of green, then red, and then again green. And that trend, however, is not continuing today. We are again seeing a day of green. And however, just in the past few hours, that is just since the opening, we have seen quite a bit of swings coming in the market. At this point, like you said, we are holding above that 24,650 mark for the Nifty, with top gainers including Infosys, Wipro, HDFC Life, Tech Mahindra, SBI, and Eternal. These are the ones that are contributing the maximum gains to the Nifty 50 index. On the other hand, Tata Steel, Hindalco, BEL, and ONGC, these are the ones that are limiting the upside when it comes to Nifty 50. On the other hand, among benchmark indices, we have Sensex, which is holding about 0.2% higher at that 80,725 level at this point. On the other hand, the Bank Nifty, that is holding at that 55,360 levels, up about 0.4% as we speak. Now, taking a look at sectors, now Nifty IT, as we mentioned, Wipro and Infosys were the top gainers on the Nifty 50 pack. Now, among sectors, Nifty IT, of course, is holding up, with maximum gains, 1.5% of gains coming in for the Nifty IT. Next up, PSU banks, Finserv, Pharma, these are the ones that are holding on to greens. Among the sectors trading in the red are metals, realty, and energy that are losing. Leading the losses when it comes to sectors. So that's how the market is shaping up as of now.
All right, so that's how really the construct of the market looks like. But in market, we do see a stock that is in focus today, and that is Cohance Lifesciences on the back of its Q1 numbers. In fact, if you look at the numbers, we do see a decline coming in on the net profit, a decline of 35% to 48 crores is where it stands at for the June quarter. Sales, however, saw a rise of 12.5% at 549 crores. But now we're joined by the management. Vivek Sharma, who's the executive chairman of Cohance Lifesciences, to weigh in on the Q1 numbers. Hi, thank you so much for joining us, Mr. Sharma. Mr. Sharma, firstly, there is a dip in the profit, like I mentioned, on a year-on-year basis. And you did guide that in Q1 of FY26, that could be a muted quarter due to the shipment scheduling and customer inventory adjustments. What are the factors that were at play?
Few things. One is overall, except for destocking, if we take the destocking out on the CDMO business, all three segments of our business have actually had a very healthy growth. So we saw some destocking in the CDMO business. And if we take the destocking out, we have actually grown about 30% compared to last year. Our specialty chem business has grown 28% and API has grown 19% compared to last year. We are also investing for growth, as committed to investors before that we have aspirations to become $1 billion business by 2030. And in line of that, we have been investing in people, processes, as well as, our capacities. And some of those factors are contributing to a short-term, dip in the margin. But overall, we are committed to the guidance that we have given.
All right. Hi, Mr. Sharma. This is Kanishka also joining in. I just wanted to talk about some segments. Now, the specialty chemical CDMO business, that has seen a sharp rebound in Q4. Now, with the Vizag dedicated site coming up, can you quantify how much of FY26 to 27 growth will be driven by the new capacity versus demand recovery?
So we don't give specific business information, to the investors. However, we are seeing, significant traction from customers, a commitment to a long-term plan. We've added new customers in that segment, and we're really excited about the potential that we see in that space. And then we continue to grow. We have made some changes in the team. We've been investing a lot of time with customers. I've personally been visiting customers in US, Europe, as well as in Asia, and looking forward to a very healthy growth in this segment.
And well, Mr. Sharma, in quarter 4 of FY25, you had highlighted the commercialization of a new molecule supplying 4 intermediates and a robust phase 3 pipeline. How much incremental revenue contribution do you expect from these in FY26, and how is the RFQ pipeline trending now versus last quarter?
So yes, we did talk about that. A molecule has gone commercial with 4 projects, and in addition to that, one of our customer got approval for one more new product just a few days ago. So now instead of one product, 4 projects, it's 2 products and 6 projects that will go commercial later on this year. So we are excited. Again, we don't quantify specific customer details, but we expect 6 different projects to go commercial later on this year. So that's good. In addition to this, we've also added a new commercial customer product with a Japanese innovator that is in tech transfer mode, and that will start to get commercial volumes later this year or early next year. So we are excited about the commercialization of the existing molecules as well as the new customer we have added. RFP pipeline is strengthening. We are seeing EU plus and China plus strategies actually panning out. We have active discussions going on with several customers to advance stage discussions with 2 large global innovators, one with multiple RFPs, one with a very specific commercial product transfer RFP. So overall, we are seeing healthy trends in that direction.
All right, Mr. Sharma, given the, speaking of products, given the planned launch of 5 new products in FY26 in API and formulations, by when do you expect to return to, consistent double-digit growth in this particular segment?
So, listen, some of the CDMO business, as you know, is slightly lumpy, right? It depends on the customer demands, destocking and all of that. But we expect, that we will maintain, I think, long-term guidance is $1 billion by 2030. We are committed to it. Pipeline is healthy. We are investing capital in expanding our capacities, in some places capabilities as well. We announced 2 of the major investments this morning. And overall, listen, we remain very optimistic about meeting our long-term goals.
Right, Mr. Sharma, with the NJ Bio and Sapla integration weighing on FY26 EBITDA margins, what specific operational or cost synergies do you expect to realize, and by when can margins revert to mid 30% levels?
So listen, the investment in these businesses was not for cost synergies. It was to acquire capabilities that really position us as a niche technology CDMO. And those technologies are really playing out well, and we are investing capital in both those businesses. As you saw in the announcement, in oligo, based on customer demand and moving up the value chain, we are adding a site in Hyderabad that will be our GMP site, and we are talking to customers, to really bring in products for that site, right? So that is as per the plan, and we expect growth coming in that direction. On the ADC front, we are investing capital in both of our sites, NJ Bio, especially with customers now coming in more for conjugation. We have actually recently signed an arrangement, an agreement with a customer on end-to-end, linker, payload, and conjugation customer. So we are expanding our capacities on conjugation there in NJ Bio. As well as in our Nacharam site, we are also investing in an OEB6 suite. We are working with a large European-based partner to really work on a high-potent molecule there. So the investments are there to really add our capabilities and capacities, and we're thankful to the customer for the trust that they put in us. Overall, our guidance, remain, to the guidance that we shared, I think, last quarter, that we will maintain high 30s EBITDA this year. We are committed to deliver those numbers.
Okay, Mr. Sharma, you have reiterated that $1 billion revenue target by 2030 again. So given the current business mix shift, capex plans and demand trends, do you see that this target will be met ahead of its schedule, or will it require further inorganic moves as well?
So I think we'll be very excited if we can meet. I think internally management's endeavor is always to accelerate the growth and meet it as soon as possible. So there is a lot of things in play, and it's that is our commitment. That is what the team is focused on. We are expanding team. We are investing in people. As you saw, we announced the new CEO of the CDMO business recently. We are investing in commercial capabilities and individuals as well as, capacities. So, we remain optimistic to meet that target, and our endeavor will be to really, move fast and forward fast so that we can deliver those numbers to our shareholders faster. And again, there's a lot of things in pipeline that gives us confidence. However, while organically there is a lot of potential, we always keep looking for inorganic targets that meet our strategic rationale. And if you find the right type of targets, we'll be happy to make investments to acquire those.
Right. Mr. Sharma, also the second half of FY26 was expected to see sharp recovery. What's the outlook? Are you on track for a double-digit growth target for the full year?
So yeah, we don't share, very specific yearly details. As I said, our guidance is we are committed to $1 billion by 2030. And as a team, we are working on strengthening our relationship with customers, strengthening our capacities and capabilities, bringing in people to the team, and then working with a strong vision and focus to really deliver that target.
All right. Thank you so much, Mr. Sharma, for joining us today and helping us understand the outlook going forward in FY26. Great chatting with you. Hope to connect with you again. On that note, we'll let you go. All right, then, viewers, let's get started with all the stock-specific queries then on Buy Now, Sell Now. Requesting you all to share your queries along with your names. Don't forget to mention the name of your stock, your holding period, and you need to send it on WhatsApp. The number is flashing on your screen, so hurry up and send in your queries, your specific query, your holding period, and the name of your stock. And to discuss them all, we are now joined by Sharmila Joshi and Sharan Leelani, who's our in-house market expert. Hi, both of you. Good morning. Thank you so much for joining us today. So let's get started with all the queries then. Let me come to you, Sharmila, first. Now, this viewer, Ignatius from Kolkata, has been holding 100 stocks of SBI at a price of 805 rupees. He wants to know whether he can continue to hold for a period of 1 or 2 years more. How are the fundamentals looking for this one?
Absolutely, you can continue to hold this because let's not forget this is at the end of the day India's largest bank. And if you have a positive sector on banking as a sector, which I do, then SBI will definitely find its name in the list of stocks that you need to own. So it goes without saying that this is a stock that you should hold for the long term. I would say that your holding period should be, in fact, even greater than 1 year if you are able to do that. But whether it's 1 year, 18 months, I think the answer will always be to continue to hold SBI.
All right, so that's the word coming in for SBI, but let's move on to the next question. This one's coming from Richie from Andhra Pradesh. He says he holds BEL at an average buying price of 425 rupees. He says that should I average it or exit? And then he also wants to know about NTPC. He's holding it at a buying price of 365. What should he do? Sharan, let me come to you for this one. BEL at a buying price of 425 rupees at this juncture. Should he book out, or should he be holding on to it for a longer period of time? And NTPC as well.
Good morning, Ankita. Good morning, Kanishka. So firstly, we'll start with BEL. It's looking negative. It's making a head and shoulder pattern on the charts. And I think if you see a breakdown below that 375 levels, you can quickly see 5 to 10% more downside, which can take the stock around to that 350 or 340 odd level, which is also its 200-day EMA. So the chances are for the defense pack as a whole, I think it's looking quite weak on the charts. BEL, after 1 or 2 days of upside, sees significant selling. So I'm not too positive on BEL. Though your buying price is a little higher, around 425, I would suggest please keep a stop loss of 375 in the system. And if it starts closing below that, please exit it because you can quickly see a 5 to 10% kind of decline in BEL. Secondly, NTPC, decent on the charts. It's consolidating below its 200-day EMA. It has decent support around that 325 odd levels. Resistance is around that 345 odd levels. So currently nothing on the chart. I think if it starts trading above that 345 odd level, you can see a trend reversal towards the upside, which can take the stock to that 370, 75 odd mark. So currently, I think it's range bound between 325 and 345 odd levels. Once it moves on either side, we can come and review it.
Okay, so that's the view on NTPC. But moving on, let's get to another query. This one is, so this viewer, they haven't given their name. They want to know which is a better option to add more to the portfolio. Is it Ashok Leyland or Jio Finance? They're looking to invest for a period of at least 3 to 5 years. Also, what's your view on IRFC currently, and what's the outlook going forward for this particular stock? Sharmila, let me come to you for this one.
So very honestly, how do you compare a Jio Financials with Ashok Leyland? Because they're very two different sectors. To be honest, I like both the stocks and for very different reasons. I think Ashok Leyland makes a lot of sense because CVs as a space, as well as first of all, I think the numbers for Ashok Leyland have been good, and if in the auto pack there is a sector that is doing well, then that is CVs. I also like their electric bus. That bit of their business, because I think that can grow really, in the metros, etc., really well in the next 4 or 5 years. So for me, Ashok Leyland is a definite buy or a hold or whatever at this price. Jio Financials also, I think that things are just starting in the sense for Jio Financials, because after getting listed, they had a whole slew of plans, and now that they have partnered with Blackstone and their mutual fund offerings, etc. So in a sense, I feel they're just getting started. So for me, again, from a longer term perspective, that stock is a hold. I'm sorry, I missed the third stock that you asked about.
Kanishka, I guess I think you missed out on that one stock. Sharmila, we'll get you that stock as well. But let me come to you for another question that's been flashing for us. It's by PVN R.S. Rao from Hyderabad. He says that he wants to know about a semiconductor space. Semiconductor sector is a sunrise sector. Please suggest few companies with good fundamentals and capable management for the long term. Just yesterday we saw this big news coming in, an outlay of 4,600 crores for 4 new semiconductor projects by the Union Cabinet. Obviously, this sector looks very buzzing. But take us through what the counters that perhaps you see benefiting from it then?
I think that to my mind, there aren't too many companies which are only sort of semiconductors, but they would probably have it as a part of their portfolio. So I don't know, I think maybe something like a CG Power or a Tata Electronics or something like that is what you could look at. But yes, I do agree that it's an upcoming sector, but I don't think that we have a pure play semiconductor company listed in India.
Okay, so that's the view there. But moving on, we'll just stop for a very short break on this edition of Buy Now, Sell Now. We'll be right back with more on the other side. Ankita Saxena, a show where we are taking all your stock-specific queries with our experts. So let's get back to all the queries then. Sharmila, this one is coming for you. This is Ignatius writing from Kolkata again. He has 20 stocks of Trent at a price of 6,361 rupees. They've been holding the stock for the past 3 months. They want to know whether or not it's a good idea to continue holding it for another 2 years. What are the fundamentals looking like?
So I don't know whether maybe you all can sort of bear me out on that. The kind of smashing success we've seen Westside have with its current sale. I believe there were like lines of 45 minutes long to make your payment, etc. So the point I'm trying to make is that I think that where they're offering in both with Westside and Zudio are concerned, they absolutely got it. It's like on point, and whether it in terms of pricing, in terms of fashion, I think they're really hitting it out of the park where that is concerned. Also, this is a segment in terms of consumption that I really like. So I think that this is a good listed player to be invested in. And I think if you have a 2 or 3 year horizon, you should absolutely continue to hold Trent.
All right, 2 or 3 years horizon, it's a hold coming in on Trent. Good positive outlook is intact. But let me come to the next question. This is M. Mathivan, who's writing in from Chennai. He says he has 100 shares of Quest Corp at the buying price of 395. Should he be holding on to it, or should he be selling Quest Corp? He's already sitting at a loss. Sharan, Quest Corp has been a wealth eroder. In fact, in the last 1 year, it has 1 year and 6 months also, it has declined more than 60 odd percent. From here on, what should he be doing with this counter?
So, Ankita, I think you have already answered the investor's question. It's looking quite weak on the charts, trading below all its moving averages, creating new lows every week. So it's on a downward trend since a very long time. So it's creating lower lows, lower high. So I would suggest a definite exit. IT as a sector is showing some kind of consolidation, and I don't think Quest Corp even other players have that much strength that they can come back to his buying price. So I would suggest definitely exit Quest Corp. Auto two-wheelers are still looking decent. Some of the PSU banks again are looking decent. Exit Quest Corp, shift there. You might make some of your losses back in the next 3 to 6 months. As ma'am again said, Trent is one more stock. I think it was a good festive pick also, good discounting lines, and I think next 3 to 6 months are going to be good for Trent also. So you can actually shift to a Trent. In fact, I think next 3 to 6 months are going to be excellent for the company. So you have many options, but again, Quest Corp very weak. Exit at this point of time.
Okay, so an exit call coming for Quest, but let's get going with other queries. This is Mantha writing from Canada. Sharmila, this one is for you. This viewer wants your view on Vedanta and the whole auto pack. Let's start with Vedanta first. They want to know your view for the next 6 to 8 quarters. What do you see for Vedanta? How do you expect it to perform when it comes to earnings? And about the auto sector, of course, we'll keep it going with the festive season talks. What is expected from the auto sector? What are you looking at?
For Vedanta, the big news, of course, is that they had announced some time back that they're going to split into 6 or 7 entities, and then the logic was that the sum of parts will always be more than what their current stock price is. Of course, we still haven't, we don't know the exact timelines that will follow and how that will exactly pan out. But I think if you have the stock, you need to continue to hold on to it and wait for that event to really play itself out. So from that perspective, Vedanta would remain a hold. Coming to the auto sector, I think a while earlier we were sort of discussing that I like Ashok Leyland because that space, the commercial vehicle space, is doing well. So what we're actually currently seeing is that the passenger vehicle space is not doing that great, and it is the CVs as well as the two-wheelers which are doing well. Very honestly, if you ask me, I prefer the two-wheelers over both the commercial vehicles as well as passenger vehicles. And within two-wheelers, I think Hero Motors is my favorite stock at the moment. I think all three are great stocks, whether it is Hero Motors, Bajaj Auto, or TVS Motors. It's just that from a valuation perspective, I prefer Hero Motors. There were some things that went wrong for the company, but now I think they're back on track. Once again, I think where the two-wheeler space is concerned, I think the electric two-wheeler bit has ways to go, and all three companies have a presence in the electric two-wheeler space. So I think that to my mind, at this point in time, makes more sense than passenger vehicles or commercial vehicles. But as I said earlier, I do continue to like Ashok Leyland.
Ashok Leyland, and perhaps a two-wheeler name rather than a passenger vehicle or a commercial vehicle. But moving on to the next question, this one's coming from Deepak Dave. He's a senior citizen. He's writing in from Gandhinagar. He says he has 120 shares of Nestle. He's bought it at a buying price of 2,435. He wants to know if he should be holding on to it or he should be exiting. Shannon, let me come to you for this one. He's clearly sitting at a loss right now from the buying price, and also Nestle is another counter which hasn't done much, and in general the entire FMCG basket has been an underperformer. So should he be holding on to Nestle, or he should probably take his money out and park it somewhere else?
Very weak counter, has recently split in prices, so I think the price has adjusted. Now it's trading around that 1,000, 1,100 mark. Fundamentally, do not expect they are growing at that 4-5% odd levels. So you will get this kind of returns also in the next 3-4 years, that 4-5%, maximum 6% kind of CAGR returns for the next 3 years. Your buying price is quite high, so I don't expect much movement. Nestle is a great company, but currently very weak in terms of pricing. Fundamentally, they had a very bad quarter, and that's why you saw the stock correcting so badly. Again, don't expect any big kind of growth, any big kind of movement. So you might get some kind of bounce back to that 1100, 1150 mark. I think if that stock comes around that kind of price, you should exit and enter into a fast moving sector or manufacturing sector. I would suggest exit these, find some sectors that have around like 20% kind of volume growth, 25% kind of revenue growth, where you'll get good returns on your investment in the next 1 or 2 years. So at this moment, exit Nestle and find one of these stocks. I think wire and cable companies are doing quite well, amazing volume growth and revenue growth. We can definitely look at some of those stocks at this point of time.
All right, so an exit call coming for Nestle. You could focus on some of the companies that are offering good volume growth and revenue growth. So that's the view coming in. But moving on to the next query, Sharmila, I think we had missed this one earlier. This viewer wants to know what's your view on IRFC currently. Possible to tell us what are the how are the fundamentals looking like for this one?
Could I get the stock name again? I'm not getting the stock name.
IRFC.
IRFC. Okay. Let me just pull that up. Yes, so I think that this seems reasonable. Valuations also seem reasonable. So if you have the stock, I think you can continue to hold. Here again, there is some expectation that there could be a corporate development, which hasn't happened yet. But you should hold on for that. So for now, the stock remains a hold.
The view coming in on IRFC. Let's move on to the next question. This is coming from Jerome, who's writing in from Chennai. He says that he's holding LIC at an average price of 650 rupees. Is it a good time to accumulate around 880 levels? Sharan, that's the question for you. 880 levels, good time to accumulate LIC. Is that a good counter to stay invested in?
Definitely, Ankita, great counter, great industry. They are expanding into healthcare insurance also. So again, you might see some kind of good revenue growth coming in the next after 3-4 quarters. So the long-term story definitely intact. But in terms of pricing, I think you can even see levels of around 850 to 840 if it breaks below that 200 EMA. But again, a good counter to accumulate. I would suggest rather than averaging, do a SIP till around 830, 840, 800 odd levels, if at all it comes to that level. But again, a great sector to be in. You can also look at HDFC Life and SBI Life. You'll be quite diversified in the insurance space. All three together are looking very good, have a good long-term growth in the next 3 to 5 years. So definitely a good pick. I would suggest a hold and even an average if it comes to around that 850, 800 odd mark.
All right, so that's how you could look at diversifying in the insurance basket. But Sharan, this one for you, we have been talking about Hero MotoCorp. You've had a positive stance on it. But this viewer, they haven't given their name. They have 700 shares of Hero MotoCorp, but they bought it at a price of 6,050 rupees. So clearly they are sitting at quite a bit of a loss. So they want to know when is it that, the stock could reach their buying price at 6,050 rupees.
Kanishka, if I knew that, I would become a billionaire. Firstly, but for them, I would suggest if the stock comes down to that 4,500 odd mark, start averaging your price. The stock is an excellent uptrend. It has just recently broken about that 4,500 odd levels. And I think in the next 3 to 6 months, you can quickly see that 5,200 and 5,500 odd levels coming. Your buying price is quite high, so I cannot exactly pinpoint when it will come. But that 5,200 mark, I think, will come in the next 2-3 months only. Festive season is around the corner. They have done some great launches in the EV segment. So expect some great numbers coming from Hero Moto, and the price will reflect that in the next 3 or 4 months till Diwali. So my target for this counter is around 5,200, max 5,500 in the next 3 to 6 months.
All right, 5,200 is reasonable target price for Hero Moto on the chart. But let me come to the next question then. This is okay. They have not given their name, unfortunately, but we'll take this question. They've asked that they have 10,000 shares of IDFC First, and they're holding it from the last 2 years at an average buying price of 72 rupees. The CASA deposit and loan amounts are increasing, but the profits are not rising, and neither is the share value. Is there any possibility for this counter perhaps to touch 150, 200 in the next 3 years time frame? Sharmila, let me come to you for IDFC First. The points that this person is making, given that, do you see any up move coming in IDFC First?
I have liked in the past, maybe around these levels only, maybe around 55, 60 levels, and then you did see it rally up to 90, I think maybe 90, 95 levels, and then we've seen the stock correct. A couple of quarters didn't go their way, etc. So it has been a little disappointing in that sense. And the other thing that I have noticed is that whenever the stock price goes to that 95 plus sort of levels, you always see some kind of selling pressure that comes on the stock, which is not really a fundamental thing, but there must be investors who must be having shares at much lower prices who look to offload at that price. So that is something the stock will have to overcome, as well as it will have to sort of really deliver in terms of numbers in a very solid way over the next maybe 4 to 8 quarters or so to be able to break that 100 level. So 150, etc. seems very distant to me, honestly, at this point in time. But at this level, I would continue to hold the stock because, as I said, valuations at this stage look expensive. But this is in terms of numbers that they have been delivering, I think that there is a potential that the stock price can be higher than where it is currently. So from that perspective, for me, the stock is a hold.
Okay, so a whole call at the current levels. That's the word coming from Sharmila. But Sharmila, we'll keep it with you. This viewer, Prashant Kamath, wants to know your view on ABB India. They've been holding 100 shares at a price of 5,600. They haven't really given us their time horizon. What's your long-term view on ABB India and the entire capital goods space? If you could weigh in on that, what's your pecking order in that particular space?
Honestly, what I would think is that the capital goods space should sort of do better going forward. For a couple of reasons. One is that with all the interest rate cuts, etc., that we have witnessed, you should see investment getting back on track and growth coming, more orders and better growth coming to stocks in the capital goods space. Most of these stocks have corrected deeply. Of course, ABB also, I think, had a split, and the stock that split from it, I think Hitachi is doing much better than what ABB is doing at this point in time. But that said, as you asked, I think that capital goods as a space should see recovery going ahead, because I think of one reason is the interest rate cuts. Secondly, I think in this we have this atmosphere of uncertainty at this point in time because of tariff. So anything that is export facing, you are taking a little bit of a sort of a subdued view on that as to how things will pan out for them. So even from that perspective, I think, if you're talking of a stock like ABB or anything that is more focused on their order wins and their delivery in the domestic context, or even if it's not really dependent on US for their growth, then I think, those stocks should do better over a period of time. So from that perspective, I do like ABB.
Okay, so that's the view on the capital goods sector. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side.
And we're getting all your stock-specific questions answered. The number is flashing on top of your screen. Keep sending in your stock-specific questions, your buying price, your holding period, and we'll get them answered by our experts. Let's resume with all the queries then. This one's coming from Narsimha Reddy from Hyderabad. He says he has Marico for the long term. He has 160 shares at a buying price of 627 rupees. Sharmila, let me come to you for Marico. Now, this counter, obviously, he's sitting at a profit right now, but Marico, while the FMCG pack has been an underperformer, Marico has still been, an outperformer of sorts as far as the FMCG basket is concerned. Now with the rate cuts coming through and the food inflation easing considerably, do you see the consumption pack to pick up? And for the long term, do you see more upside in Marico, or should he book his profits?
No, I think he can definitely hold, for the reasons that you were talking about. And also, I think that to just extend that argument a little further, for a long while, we had heard from a lot of these FMCG companies that their volume growth, especially in rural India, were sort of not in the best shape. But I think now that we've had a normal monsoon as well as coupled with the rate cut, you would possibly see a resumption of consumption from rural India, and that would benefit stocks like Marico. So at this price, the stock is a hold.
Okay, so a whole call coming from Marico. But moving on to the next query then. This is Arjun writing from Kolkata. We already had, a Sharmila tell us her view on Vedanta. Sharon, let me come to you now. This one is a short-term trader, so he wants to know what are the prospects looking like for Vedanta and Hindustan Copper as well from the metal pack.
Kanishka, I think if he has got into Vedanta, I didn't hear the price if he's got into not, but I would suggest at this point of time, do not buy or make a long position. And if at all you have, please keep a stop loss of 420 in the system. The whole metal pack after 1-2 days of upside gives a very big downside. So Vedanta being a part of it again has reacting almost down 2.3% today. So I think a lot of it has to do with a lot of global situation, also global news. And at this moment, everyone is waiting for the Trump and Putin meeting to get over. So if you have, please keep a stop loss of around 420 in the system for Vedanta. At this point of time, there is no particular view on it. Again, Hindustan Copper, as the world open up, as businesses do well, copper is the first thing to react positively. So if at all you have a position, I would suggest hold on to it with a stop loss of around 230 on a daily closing basis. If you don't have a position and if you're thinking about add only about 250 rupees, that's its 200-day EMA. If it starts trading about the 250 odd level and the global geopolitical issue is calm, you can actually see a good move coming in Hindustan Copper about the 250 odd mark.
To watch out for both Vedanta and Hindustan Copper. But let's move on to the next question. This is Krishna Kumar, who's writing from Hyderabad, who holds 51 shares of Adani Enterprises at a buying price of 2,279. He's a short-term trader. He wants to know if he should be holding on to it or should he be selling this counter. Sharon, let me come to you for this. He's holding Adani Enterprises right now, a very, very marginal profit that he's sitting at. Let's say he's not given a time horizon, though he says a short-term investor. Let's say for a 3 months, 6 odd months perspective, what do you see on the charts for Adani?
My advice, Ankita, would be to move the stop loss to around 2150 on a daily closing basis. The stock, after giving a decline, is seeing some kind of pullback towards the upside. It has a breakout above that 2,300 odd mark. If it moves above that, you can quickly see that 2,400 to even 2,500 levels coming, and its stock actually retesting its 200-day EMA. So his entry has been quite decent. I think for a trader, he's done quite well. But definitely do have a short-term stop loss in the system around 2175 on a daily closing basis or 2150, whichever he prefers according to his risk-reward ratio. A good breakout about 2,300 can be seen.
Okay, so that's the view on Adani Enterprises. But Sharmila, let me come to you now for this one. Now we have another query on the FMCG pack. So this is Nalini writing from Ahmedabad. She's been holding 60 shares of Tata Consumer Products. She hasn't mentioned her buying price, but she had acquired them in 2020. She wants to know whether she should continue to hold these for the long term, and also if it's a good idea to add more at the current levels.
I think it's a yes to both. This is again a stock that I like, and given the basket that they have, whether everything in it, the Tata Sampann brand, the other brands that they have acquired, Starbucks as a separate entity. I think the way it all adds up, and the fit that it has in the current consumption patterns that we are seeing in the metros and the smaller cities, this stock, to my mind, has ways to go. At this valuation, it's not exactly cheap, but if you want to hold it for a long term, if you have a long term view, then you could add further. But definitely, I think continue to hold what you already have.
All right, so that's a view coming in on Tata Consumer. Whole call from Sharmila, but the next question is also on Tata Consumers by Arjun, who's writing in from Kolkata. So Sharon, let me come to you for this one because he's asking a short-term perspective for Tata Consumers and Hindustan Copper on the charts. What do you see for both the counters? Now we have a positive outlook for Tata Consumers by Sharmila. What do you say?
So Ankita, Hindustan Copper we just discussed, so it doesn't make sense taking it again. Again, Tata Consumer, I also like, I've given buy recommendation in the last 2-3 weeks, once or twice. On back of results, I think it saw some kind of decline, but it's consolidating in a very tight range, just below the 200-day EMA. And I think a breakout about that 1075 odd levels can take the stock to that to 1100 and even 1150 odd levels. So for me, I think it's quite decent. But since you're a trader and a short-term trader, I would suggest please keep a stop loss in the system. If you buy around current price or the breakout price of 1075, move your stop loss to around that 1040 on a daily closing basis. And if you see higher levels, please trail your stop loss. The market is quite volatile for short-term traders. So you have to equally manage your risk if you're going long also.
Okay, so that's the view on Tata Consumer. You need to be cautious since it's a volatile market going on right now. But on that note, Sharan and Sharmila, we'll let you go. Thank you so much for joining us today and helping our viewers answer all their queries. With that, we're completely timed out. That was the last query of the day. But we'll see you Monday at 11 a.m. With more of your queries to be answered on the other side. So keep sending them in. Ankita and I will take your leave. It's a wrap on this edition of Buy Now, Sell Now.